Tax planning is a critical but often overlooked part of a retirement plan, and many retirees fall into the trap of reactive tax preparation instead of forward-looking strategies that could save them thousands of dollars. My guest is Adam Howard in Lexington, Kentucky. Adam, thanks for joining us. What's the difference between tax preparation and tax planning?
Yeah, so we kind of look at tax prep as paying attention or doing something with your tax situation that's already occurred. We're somewhat being reactive when it comes to taxes to that point. Tax planning is more forward thinking if you're thinking about it. We're trying to plan for something way down the road, maybe towards retirement, maybe a big life change event, buying real estate, you name it. But we're trying to plan for that to better place us in a better tax situation and just become more efficient in doing so.
Now, with income in mind, are Social Security benefits actually taxed?
Yeah, so we get that question all the time. To answer, is Social Security taxed? It's not a straightforward answer. It's yes, no, maybe, or sometimes. Social Security, in the way it's taxed, there are certain bands that if you're making less than a certain amount, then you're not taxed at all. If you're in a specific range, it could be 50% of your Social Security is taxable. And if you're over a certain band, we could be looking at 85% of it's taxable.
So in reality, in retirement, you're taxed on what you spend, not what you earn, right?
Yeah. So I assume we're talking, pulling money out. Obviously, taxation on what you're spending obviously can vary on where you're living, right? Is there state income tax? You're going to pay federal, so forth and so on. But we try to take the approach of making sure we're not only diversified in how we're invested, but also diversified in the types of buckets of money we have, right? We might have some buckets of money that are pre-tax that the IRS has never seen. We might have buckets that, we're paying, we'll call it minimal tax or capital gains tax on the gains there. And then we might have other buckets of money that are tax-free. So if we can efficiently make sure we're allocating towards the proper buckets and we get to retirement, we can hopefully mitigate and give the IRS as little money as we can.
So in this case, how do you know if you have the right advisor?
Sure. At the end of the day, a lot of us advisors do a lot of the same things. We kind of say in our office, we ask a few questions. Do you like them? And can you hang out with them? At the end of the day, again, we do a lot of the same things. I try to both interview the clients, and we know as well that they're interviewing us. Do I feel like I can go sit in a coffee shop with my advisor and go have a coffee, talk work for 5 minutes, and life for the other 55? If that's something that you can do with your advisor, then I'd say it's a good fit.
Thanks, Adam. That's Adam Howard in Lexington, Kentucky, and this is Retirement News Online.